Welcome to Politics, Economics, and More. Your go-to channel for insights, analysis, and updates on happenings and developments in Nigeria and the global space. Our goal is quality analysis to deepen engagement and foster dialogue on happenings around you. The Nigerian insurance industry received a breath of fresh air recently with the enactment of the Nigerian Insurance Industry Reform Act of 2025. The law had been in the works for several years but was eventually passed by the National Assembly and signed into law by President Tinubu on July 31, 2025. The law seeks to energize the growth of the insurance and ensure its maximum contribution towards the growth of the nation's economy. It is expected it will deliver greater public confidence in insurance, attract investment into the industry and accelerate insurance penetration across Nigeria. The law empowers the industry regulator, National Insurance Commission (NICOM) to regulate the industry more effectively, aligning with global best practices and reinforcing consumer protection mechanisms. The law addresses a number of key aspects as follows: higher capital requirements for insurers. Under the new act, significant changes have been made to the capital requirements for insurance operators in Nigeria. Life insurance companies are now required to maintain a minimum capital base of 10 billion naira as against the previous 2 billion naira. For non-life or general insurance providers, the minimum capital has been raised from 3 billion naira to 15 billion naira. Composite insurance firms, which offer both life and non-life insurance services, must now meet a new capital threshold of 25 billion Nigerian nairas, up from 5 billion Nigerian nairas. Reinsurance companies saw a hike from 10 billion to 35 billion in their capital requirement. Tougher licensing rules for insurance agents. The new law sets strict standards for becoming an insurance agent. No one is permitted to transact insurance business in Nigeria unless licensed. Any individual operating as an agent without a license faces severe penalties including fines and/or imprisonment. The law also penalizes insurers who transact with unlicensed agents. Such insurers face a penalty of 5 times the amount of premium collected in the unlicensed transaction. Furthermore, the Act prohibits ex-convict and bankrupt individuals from being licensed as insurance agents. To qualify for licensing, applicants must possess a certificate of proficiency from the Chartered Insurance Institute of Nigeria, have at least 10 years of experience in an underwriting firm and must not have a history of dishonesty, fraud, or bankruptcy. The National Insurance Commission retains the authority to approve or reject license applications, with unsuccessful applicants having the right to appeal to the Commission's board. Heavy sanctions for unlicensed insurance business. Individuals who operate unlicensed insurance businesses now face fines of 25 million naira. For companies, the fine doubles to 50 million naira per principal officer, along with the risk of a 2-year prison sentence. These strict sanctions are aimed at eliminating quack operators and protecting consumers. Zero tolerance for delayed claims. The new act will ensure prompt settlement of claims. It imposes strict timelines for claim assessments, approvals, and disbursements. Failure to comply attracts penalties or suspension of operating licenses, reinforcing accountability and fostering customers' trust. Compulsory insurance schemes. The Act enforces broader compulsory insurance schemes such as that of public buildings in addition to third-party motor insurance among others. It also introduces a policyholder protection fund to be financed by 0.25% of every operator's gross life premium. This ensures that consumers are compensated even when an insurer becomes insolvent. Digital transformation of insurance operations. For investors and other stakeholders, these reforms open the door to new opportunities, better returns, and a more secure business environment. The law also supports Nigeria's wider goal of creating a stronger, more diverse economy. Implications and opportunities. With the compulsory insurance such as that of public buildings, owners of such buildings more ensure insurance cover or risk penalties for failing to insure their buildings. Public buildings according to the Act include those open to the public such as schools, hospitals, and for recreation. Greater penetration. Insurance penetration in Nigeria is estimated at about 1% of the population. The push for digitization is akin to the push for financial inclusion in the banking sector. Like fintechs, insurtech companies will be expected to flourish in the period ahead. The push for prompt claim settlement and policyholders protection fund will boost confidence in the sector and attract more premium to the industry. With the emergence of this new law, Nigeria's insurance sector is entering a new and exciting phase. This law will help the industry grow, reach more people and protect policyholders better. The focus now shifts to the industry regulator and key operators in the sector to set clear targets for the insurance industry. It won't be out of place to seek a 2 or 5% insurance penetration within the next couple of years. What is your view of the new insurance law and how does it affect you or your business? Let us know in the comments. To get notified of new uploads, please subscribe and hit the notifications button. Don't forget to like, share and comment.